Let me share my screen. If you guys can see it. So we'll start here. We'll go live a little bit more, meaning live charts. Even though you guys see me trading live, I would say almost every day. And a lot of this information that I kind of cover here is to, especially for newer folks, kind of bring you up to speed, what we do and how we do it, right? There's no set in stone strategy. Volume profile, market profile, footprints. When you combine them, together, and not necessarily do you need all three components, but when you combine, I would say, let's say volume profile and footprints, you have the key levels, and the footprints give you the confirmation whether it's on your side or not. Meaning, if you're waiting for a bullish sign, you want to see some aggressive bulls come in, you want to see the bid inflated, those type of things. So that's what I teach in the Discord is market profile, volume profile, and footprints, right? Along with some simple stuff like volume anomalies, understanding that, the distributions and the structures, the highs and lows, because the market evolves and changes constantly. And a lot of people that are stuck, one way and not willing to accept new knowledge tend to fail in the market, right? So you as a trader, you have to evolve. I've pretty much traded all the strategies that you guys can think of throughout, 15, 17 years now. If you've traded anything, from cloud to Chimokus to EMAs to VWAPs, just looking at daily, open, high, low, close, done that as well. So, I mean, a whole list of shit that, and then eventually once, you get a really good training on some of this stuff like volume and market profiles, it really opens up your eyes how the market auction theory works. So, and that's where we're going to start today, right? So, this PowerPoint, if you don't understand it, right, when you read it the first time, it's not a holy grail like, oh, you go through the PowerPoint, now you're a profitable trader. If it was that easy, and it would be super nice. I mean, I'd love it for you guys to have that, right? Where you can, read it and here you go, you're done. Market generates a lot of information, guys. So, and as an individual trader, right, when you're in your zone, reading the market information and making decisions on those, you're exercising the components of all three pieces: the market, the volume, and the order, right? The order flow. So I do suggest you go through this PowerPoint, take notes, and if you do have one-on-ones with me, which you guys know you get them for free after you do some due diligence on your side. Uh, uh, Once we go, I will try to understand your understanding of what you do in the markets. How do you kind of assess the information? So that way we know how to help you, right? So it's important that you understand all of this, and that you can have a carry on a conversation with somebody with knowledge, and that you can teach them. If you can't teach them, you don't know it. And that's for everything in life. If you can't teach somebody something you're doing, you're not good at it. So hopefully, after we're done with this, you guys will feel a little bit better about, the three components. And then we'll show you the sections and how it works. When it's trading live, I mean, the data changes a lot. And you guys see me when I traded yesterday, I was calling out levels as we were adapting to the market. We know where the big levels are, whether it's value areas or not, but the market changes a lot. So suggest you go through the PowerPoint, and this game of trading is, believe it or not, and everybody tells you this, but it's really mental. Until you realize this and you fight the demons inside of you that tell you to take two more trades like free. I personally messaged her yesterday and I told her to stop trading. And what did she do in the power hour? She traded. And how did you do, free?
I lost $500.
Yeah, she lost $500. So let's ask free, if she lost $500 5 days in a row, how would she feel?
Suicidal? I'm just
Exactly. But
kidding.
you
Yeah,
had that
crazy.
when you had the $500 in your pocket. But I call those people, and it's just a term, a greedy pig, and you wanted more. When you think about it, do you make $2,500 a week in your job?
Back in the day.
But that's 10K a month, right? And that's just pre-tax, right? You do taxes at the end. So that's a lot of money, guys. You know, $300 a day is 100K salary. So, and you know, especially now where the times are getting a little tougher financially, credits are shrinking. You guys have to really own your mental state, your discipline. You know, Drew got much better at it over time. I remember when he would, you know, go on and just trade. Now, you know, I test him sometimes. He knows that. I'm like, hey, did you take that? And he'll say, no, I turned it off. And I tested him yesterday as well for it. But he's passing. So, and it's important that you guys stick with it. Like Cuban's gotten a lot better over that. And a few of you others, you know, I'm not going to name every one of them. Like Fred, he's good at it. Uh, you guys have progressed where, you know, you see the value of the money. And, you know, the more you have it, the easier it is, honestly, to keep compounding. It's almost like throwing it on a pile and you see the pile grow. So, Trading in the Zone is a really good book. I strongly suggest it. Pick up the language of volume profile. This PowerPoint should help you. And then if you have the watch list, if you have time to attend watch lists or lives, and you know, Drew's been doing some teachings on the side as well. He posted some good content for you guys on the order flow and footprints. Go for it. I mean, the more you can pick up the language, and at one point you have to take that language and all you learn and apply it. You have to test what you know, but the backbone of all of that is your mental and discipline state. If you're not able to control your risk, it doesn't matter how much money you make. And it's the same for people that work in a corporate, right? You make 200K and your expenses are 150K. You're not going to do well. I mean, you're just going to be going in the rat race to pay the bills. And you can change that, right, by managing your risk, managing your expenses. So if you're trading, I would say, you know, on futures only, you know, you have to establish some rules. And in futures, you have to have a stop loss. And if you don't believe me, trade without it, and you'll see what I mean by it. Especially on NQ, you trade NQ without stop loss, and you will have a couple of heart attacks, right? Especially if you're using your own money and you're not using Apex or whatever the funded companies you guys have. It changes, you know, the emotional state when you're in a trade, right? You know, when I go at 10, 12 contracts, but you know, my heart's pumping sometimes, right? Because you want to make sure that you're in a probable state, so the emotional side of it. But the best to control those emotions is size down. Okay, so getting started, you know, main chat is where we all kind of trade stocks. Then you have the social chat. You guys can go there and, you know, chat about anything that's not stock related. Trading 101. This is where all the educational material is posted. On the on the Shorty's corner, this is where I post the plans. If I, you know, if I'm not gonna be live or if I have stuff, you know, family, I usually use Shorty's corner. I post stuff there. The past watch lists usually get posted here. I would say 99% of the time they're here, and you can also find them on Catching Rockets YouTube, right? So you can do that. Orbs chatter, this is where you are right now. This is where we trade live from, and sometimes we'll do, you know, the free chat, but mainly we're here. Okay. Expectations, if you're, you know, and this is after I've noticed that some of you started using the funded, nothing against the funded accounts, but you guys lost the, you know, the feel for, you know, the real money and how taking money, like, you know, not picking a new free, but $500 in cash is a lot of money, right? So if it was in person and I gave you $500 and I told you go throw it down the river, would you do it? Most likely,
Negative. No way.
normal human beings would not do that, right? They would take that money and they would put it in their pocket, right? So when you guys are, you know, you're up nicely 500, 600, you know, on these funded accounts, there's no reason not to step out and go on with your day, right? Do something. The goal of trading, especially for me, is to, you know, to get my time back. There's no time machine where I can put some coins and I get extra hour every day. We all get the same time. It's how we use it, right? That's gonna write your own story in life. So buy your time back. So getting into the market auction theory, right? So just like any other auction that you guys have ever seen. If you've never seen one, I strongly suggest that you go to, look up some stuff in your area. There's usually some stuff that's going on where they have auctions on cars or auctions on antique stuff. Just go to it. It's kind of fun to see what you learn here and how it applies there. It's actually the same concept. It's just that we have a lot more participants than a little city town auction theory on I don't know, on some kind of ring somebody's selling, right? There's going to be a lot more interest to trade here, liquidity, the capital markets move. So, it's the same exact concept, but just a lot more participants. So usually the markets are in balance as you guys can sell, and the buyers and sellers are happy to trade in balance, and the dealers are really happy when you trade in balance, because they're trading off of the spreads, make money on the spreads and the locals, right? So they pick up whatever they can on the quantities. Once they're breaking that balance and going in balance or a trend day, that's where the hedges are taken out. They reverse it, or the seller step away, or the buyer step away down, and then you'll have a trend day imbalance. And then the key is when you come to that area, let's say the acceptance, the bottom left here, when you break the balance and you come back, it's important to know, are you going to be accepting this value higher here, or are you going to be looking for a rejection, right? So, and that's the same concept you can apply on the value areas of the volume profile. And that's why we use volume profile and market profiles, is to give us the visual structure. One gives you the time and price, one gives you volume and price. And when you combine the two, it really becomes helpful identifying the levels. And, a lot of times, time and volume should flow together, but there are times they won't, right? There's going to be a disparity there where it's not aligned. The market moves, right, on two pieces, right? If there's a new information that's being generated, like let's say, J-Powell comes out and says we're going to lift the rates by 200 basis points, well, that's it's going to drive the market. The news is going to break that balance, and you typically see it right before the big events. The market's consolidating. They're not really giving us a bigger range. Sometimes it's a big range with a lot of buyers and sellers, but a lot of times it's tight and then they explode from it, right? The wider the range, the less likely it's going to break. The tighter the range, it's more likely to be broken and go up or down, right? Once these levels are broken, we're going to search for new value. Like, where are we going to be accepted? So if you think about daily profiles, you break the value area 1 to the upside, that means you don't think that value where you were is fair, right? So you're going to be buying from that value. It's almost like you guys go to a store, and for instance, let's use my wife for an example. She figured that 30 lip balms are much needed in our house, and she bought 30 of them. So either she got a really good deal, or she needs 30 lip balms for something. I have no idea for what. Tried to explain it, but I still don't get it. The idea is
you can share them.
maybe it was a discount, right? Maybe it was a sale that never happens, right? I do see packages from Sephora here and there. So when they come in, I'm like, okay, either she was a responsible buyer, right? Or she was an initiative buyer, meaning she just needed it, she wanted it, and she buys it. And then you have the people that buy based on value, right? So if it did drop, let's say 30 for $2, well, she got a hell of a deal. I don't know what the typical price is, right? If it's a fair value, but if it was a value for her, she bought in abundance. And same in the stock market. When the stock drops to below the value, you're going to have aggressive buyers come in, right? And aggressive buyers usually are typically from a different time frame. What I mean by that is, if Apple stock was to drop to $80, how many of you would buy it? None of you. So none of you, yeah. Okay. So you guys already have a perceived value of Apple stock, right? If I was to tell you Tesla is at $10, would you buy it?
Of course.
see, a lot of you have that positive mindset, of course, right? And it's the right mindset. You're creating value based on the previous uh, timeline of what happened to that stock and what products does it have, right? And the future. Market's always, forward looking. So you're looking to what is Tesla going to do 15 years from now, right? We're going to drive Teslas on Mars. Where are we going underground? And that's how the market kind of creates value, right? So for a lot of stocks, value shifts over a period of time. If you guys just think about like Kodak and those companies that were kind of mechanical and old and never adapted, the value deteriorated and they're no longer in the market. So this is the same concept here: balance, imbalance, acceptance, and rejection. And this happens pretty much on all time frames. I look at them, I look at profiles on daily, weeklies, and monthlies and kind of figure out where's the balance, where's the imbalance. Balance being that it's value area. So you have the active auctions, and usually, when you see an active auction, that usually typically, I would say, leads to a more of a range day. And you want to make sure when you're watching that you're seeing pretty much all time frame participants are involved. And then you have the passive auctions, and usually these are sometimes driven in the morning and the gap ups, earnings, news events where you see a block of orders come in at above the price or below the price, and then trying to instigate the price to go to the passive side. And the algos and the other traders follow along, whether it's aggressive behavior for market buys or limit sells or vice versa. But that's what that means. You have different time frame traders, right? So a market, if you only had long, let's say other time frame or long time frame traders, how liquid would the market be?
Very liquid.
I mean, there would be no trades, guys. I mean, think about it. You want to buy, you guys said you guys would all buy Apple at 80. Would you guys be buying and active right now? If a lot of people wanted it at 180, think about it. How quickly would the stock drop there? It would drop fairly fast, because if you think about it, if nobody wants the product at, let's say, I don't know where it's at, like 175 now, and everybody wants it at 100, and nobody's willing to buy at those levels, what happens to the auction? Somebody's going to say 174, nobody's there. 173, nobody's there. 170, nobody's there, until it gets to the point where you guys have the bids and the buyers come in and buy it up. So those are the long-term buyers, and usually, like I mentioned a few times, long-term buyers and long-term sellers don't cross paths. So when you see, let's say a weekly value area low being respected, like we had on ES 44.94, if you guys recall, once that level was broken, we anticipated that we were going to go, the 4,400, right? Which was also June. No, I'm sorry, not June value area high, but it was, I believe, July or something. But we'll get to it. We were playing between the big ranges of the market. They're shifting between values of 1 month. We reclaimed August really late in the month of August, and we rejected the value area high. And then, you're dancing now to visit the bottom of that. So, and it's usually driven on those extremes where it's a monthly value area high or weekly value area high or low. Usually that's where the long-term, time frame traders are sitting, because they're, do they participate in the day short time frame trades? Depends where the price is, right? Is the price is at those levels, they're going to get in, and usually you get a spike one way or another. Okay. So activity levels for time frames, and what this means is, who's involved, right? So if you think about a short time frame participant, usually makes up most of the transactional volume, in a time frame, because they're just trading to make a few dollars, right? I mean, for some of them go 100 contracts, so they make a little bit more. But long participants, do you guys really think they make up a lot of volume when they come in at the bottom, like we had, let's say, recently on ES at 4,400? There's so much you can buy in such a short period of time, right? And that's the time component. Then you have the volume, right? How much could they actually buy there? How much inventory was available to be bought? And they're usually not the biggest component, but they buy they buy a large chunk compared to the short time frame traders. Therefore, you get those large orders and the spikes. Because usually, if you watch the tape, even on NQ, and Drew knows this, it's rare to see on NQ something more than 10 NQ order. When you see it, your eyes kind of perk up and you're watching to see what happens, right? If you see like a 50 and a 60 order, and I think Drew saw one yesterday, he was like, "Uh-oh, I'm gonna go in and watch so I can follow this guy."
I think it was 68.
Yeah, I think it was 68. Yeah. Usually you pay attention to those and see, right? And if you take a look at where that 68, for instance, happened, I don't think it happened in the middle of a chart, in the middle of the zones. It was probably at the extremes, right? Where they're waiting and then they sold it. And they knew their risk, right? They knew how much they could afford to lose and they were targeting a certain level. And then typically what happens, and this is even way back on the floor, when somebody yells out a large order like that or puts in an order, right, on the floor, people are like, "Oh, let's go to that room and let's go watch what happens there." And then they follow along as it shifts and people go with the trade. They don't try to fight the trade unless they're contrarian and they have a little bit of extra cash they want to spend. Okay. Anxiety level, you guys should be experiencing this. It usually goes from active to passive, and the long time frame participants goes from passive to active, right? And these are your people. They're on the ask when they're selling, they're at the bid when they're buying, and they have their order and they just sit and wait. They don't really move their orders too much. They just sit and wait, and once it's triggered, once it goes from limit to buy, basically their anxiety level triggers as well, because now you're in the trade, right? You're executing. Okay. So I mentioned this, I can pretty much skip it. Long time frame buyer and seller will never cross paths, guys. And you can, kind of think about that, but in rare occasions, can it happen? Yes, but 95% of the time it should not happen. And if you guys have any questions on that, I'll let you ask, but that's simple. Market auction, I mean, it's made up of three components, right? You have the time, price, and volume. Price is basically your discovery tool, right? And if you apply it to your simple life, how many of you guys have gone and bought eggs recently?
Uh-huh.
Okay. Did you notice any price changes on eggs?
They're up.
Yeah. So during COVID, right, there was a lot of stuff. Then they had some kind of virus that, caused the supply of the eggs to be hurt, right? So they did not have the same supply, but the demand of the eggs actually stayed the same. So the price went up, right? When the price went up, at one point, people actually stopped buying eggs. And if you look up in Ecuador, they had the egg strike, where basically all the farmers and all the markets, they're lifting the price of an egg so much that people could not afford it, right? So people united together, and what would you do as people? How would you bring the price if you want to bring the price of the eggs down?
Stop buying.
You stop buying. So basically they said nobody buys a single egg. And what's going to happen? Do the chickens stop, the hens stop producing eggs if you stop buying? Do you press a button and no more eggs come out? Oh, the supply is still going to grow, but the quantity on the shelves is also increasing, therefore not buying. So now they either have to spend more money for storage of the eggs, or they have to do what?
Lower the price. They're coming back down.
You have to lower the price, and it's the same concept, right? You use the price to discover, do you have buyers at those levels or sellers at those levels, right? Obviously, when the eggs were expensive, I would say all the farmers like, man, this is great. I used to get 20 cents an egg. Now I'm getting $1.50. But those moments are short-lived before somebody reacts to it, just like in a few countries they did. And even here, I would say people went, instead of buying the pasture or organic eggs or whatnot, they went to buying, economical eggs, and that's okay. But they shifted, they adjusted the goods one for another. So that's the price. You use it to discover, at one point, your price that you set is not going to have the same demand, and the auction is going to slow down. Time, basically, it's used to regulate the opportunity, right? How many of you guys would like to go back in time and buy NVIDIA at 110? Hopefully everybody says yes. And that opportunity was not there for a very long time, right? It was there, and it just people dwindled. They didn't want to buy it, but they'd like to buy it at 200. They like to buy it 4. So now everybody's like, okay, man, we're never going to get a deal, but we'll just buy here now. And that's the concept of value buying, because price plus time plus volume is true value. So, and the volume is pretty much your key component in all of it, right? If you don't have the volume, if there was no participants, you can put price of any kind anywhere, and it's just going to be a price. Volume is the confirmation tool, right? The higher the volume, let's say at those prices, and prices being aggressively bought up, most likely it's going to go higher, right? If you tell us now, that there's a World War III coming, a lot of you guys, I don't know who would be buying eggs, but you're going to buy food that's not perishable, right? So the demand for different type of goods would go up, while the demand maybe for eggs, maybe, powdered eggs or something like that would go up, if that makes sense. So this time and circumstances changes, right? But these 3 components give you the value of whatever you're looking at. Okay, so I kind of covered this, time's the regulator. It's not only your 9:30 to 4 trading and ETH sessions, but it's more about understanding where's the price in relationship to the time, and how much time did the price spend at a certain price level. And that's basically your market profile. Remember, market profile focuses on time and price, while volume profile focuses on volume and price. How much volume at that price did we exchange? And both of them are important, right? And I can't say one is better than the other, because I use them both in kind of relationship. But Stadlemeyer that coined the market profile in like 80s, where only floor traders were able to see that, right? The market profile piece and the order flow and the data, and then he brought it up to everyone and actually trained them to give them that price and time. Okay. Any questions on this? I'm going too fast. Slow me down. Okay. Like I mentioned, price is used for, in my opinion, I look for maximizing profits. And if you think about, yourself from a buyer and a seller perspective, right? So if you're a seller of a good, I mean, you'll be more inclined to sell more inventory when the price is high, hopefully, right? If you're in a business to make money, that's how it would work. If you're, let's say the same seller also probably was a buyer at some point when the price of that good that he's selling was fairly low. And it's the same concept again of everything that you do in life. If the eggs, let's say, you go to, I don't know, Whole Foods or wherever you shop, and you see, let's say, organic eggs are $3, and let's say the non-organic eggs are 3.25. Which eggs would you pick? Would you pick the organic or the other ones?
Organic.
Yeah, because at that point you're not valuing the 25 cents. You're saying that organic eggs bring you more value for the 25 cents increase, right? Same amount of eggs, the quality of the eggs is what you're paying for, and you're going to pay a little bit more, but you're going to have something called organic, right? And it's the same concept here. If the price is low enough, you're going to attract the buyers. If it's high, you as a seller are willing to offload the inventory much quicker. And the only way the price will go higher when you have a lot of sellers is if you have a lot of market buyers and they come in and they buy up all of your selling excess that you have. Okay, so if you're new, it's important that you understand this slide. It might look simple. We never have more buyers or sellers in a market. It's impossible. If that was the case, the market readings would be fairly easy, right? The orders are always paired, meaning if I'm buying something, Drew has to be selling that to me. And if I'm selling that, I mean, I need somebody to buy it, right? And if it doesn't happen, the transaction didn't take place and therefore it can't move. We'll get into the aggressive, passive, the bid side so you guys can understand it. But it's important that you understand that all the orders are paired, right? And figuring out the pairing is the impossible task, because it can be paired many different ways, right? You have the aggressive, you have the passive, and there's a lot of ways to trick that, right? How it's being traded. Like yesterday, we saw middle of the day there was a lot of bid buyers, like resting orders sitting at a level, and they got filled. And I was live and I explained that. They come in different shapes and forms, and you have to kind of read the data to recognize it, okay? Any questions on market auction theory? It's fairly simple. You just have to think the whole market moves based off of it. No questions? Okay. I'm covering footprints chart first. Kind of give you an idea, because it does go along with the market auction theory, because you're able to see it live almost behind the candles. A lot of you guys are used to seeing regular candles and not really seeing any bid ask size, right? And it kind of, you guys get scared, but it's literally the same candle. It's just telling you how was that candle formulated, right? At what level was the ask? What level was the bid? Was it aggressive buying or selling? And that's, components that we're going to cover here. Okay. So the footprint charts, a little bit of terminology. So there's an absorption, right? There's a divergence plus the delta flip. So this is almost similar to any divergence that you might know so far, right? If you used RSI, if RSI is making lower highs and the price is making higher highs, that's a divergence, right? Divergence here is a little bit different, right? It has to do with candles and the delta number and the green or red, but we'll cover it. Stacked imbalance. Stacked imbalances are basically your aggressive buyers or sellers, but they usually come in a bunch of 3 rows. Then you have the high volume nodes or cluster volumes. So dependent, how you look at it, I consider high volume nodes if it's, it doesn't have to be 3 stacked or 2 stacked POCs, but if there's a cluster of volume in the area, that's a high volume node. Is it better when the POCs are lined up? Yeah, has a higher chance that it's going to bounce there. Approaching support and resistance, that's basically it's not really a terminology, but a concept. When you're approaching, let's say, previous week value high or low, you expect to see some more buyers or sellers, depending on where you are, right? They're going to come in and try to kind of move that price up or down, just like we saw, when Drew was trading live. He said, hey, huge order 68, and we're pretty high up there, and from there they're able to go. Okay, so what does it look like on tape, right? And if this is confusing, you have to ask questions, because if you guys don't understand this, man, like you have to make sure you understand this. And the next slide. Okay, so in order for price to move down, these orders have to be eaten, right? So if we want to go to price 101, you have to take this guy out that's selling 100, let's call these lip balms. If you want to, if they want to start selling here at 101, you have to take out everybody that has these 75 at 100. Once you get rid of these, then the next supply, the next set of sellers are like, man, we have the same lip balm, but not at 100. Our price is 101. Because this guy is gone, that means the next guy here is sitting with 90, and so on and so on. Does that make sense? New guys, new ladies, does that make sense to everyone?
Yes.
Okay. If you're an aggressive seller, right? Let's say you're selling lip balms. I can't tell who talked, but let's say you're selling lip balms and you had a price of 100, and you had 75 of them. You wanted to get rid of them at 100. I come to you and I'm like, hey, I can buy 50 from you at 99. Would you accept it?
Now, maybe if you buy all 100 for 99, I would accept it.
You only have 75 at 100.
I mean, if you buy 75 from me, I would accept it, but not
Okay.
not the
So
50.
that means, is he a passive seller or an aggressive seller?
Passive seller.
He's passive. Passive sellers, they stay at a level and they don't accept a price that's lower than that. So, in this case, he wants to get rid of all of his 75 at $100 average, right? Or price. Therefore, he's a passive seller. If he was willing to sell some of these lip balms below the 100, that would make him an aggressive seller because he would be selling at the bid, right? He would be taking the liquidity from these 50 people here. I'm sorry, 50 quantity here. Go ahead.
I meant something different. I meant I have 75 and I want to load them all off, but you only bid 50. So I would be only willing to come down to your level if you take them off my hands. If you take all of them off my hands, that's what I meant. And if
Oh,
you
that's
only
what you
take
meant.
50.
Well, in this case, I'm offering you 50 and 99. That's the example.
Then okay, then the answer is no.
Yeah, so you're a passive seller, right? And what he's indicating is called AON in the market, all or none. Sometimes in the market, if you guys buy shares, like I buy shares for me, my family, I will do an AON order on something that's not, if I see the liquidity and the daily volume averages are not great. Like on Pfizer, I didn't have to do an AON because that company has a lot of outstanding shares and you can pretty much get filled on whatever you buy. But typically, if it's not a liquid stock, right, you can do all or none. And this, in a level 2 market, you really can't do that, right? They're usually going to come and eat it a little bit, depending on how liquid the market is, right? And you guys see the price action sometimes go to resistance, come back, and they're chipping away from that supply. Either the supply has a lot, like an iceberg order sitting, or it's just that 75. And once you eat that 75, you'll be able to go to the next level. And that's why different exchanges, right? The dealers, locals can see the supply at these levels, right? When they combine it, they have a little bit more information than we do as traders. Okay, so then if I wanted to sell aggressively, I would be taking liquidity from this 50. That would make me an aggressive seller, right? The passive buyers, right? If let's say Freeze like, I don't want to pay 100. My budget's 95, and I want to buy 200 of them there. And Drew wants to buy 49 lip balms at this 95 level. Now they made up that price at that level, and they're going to be passive buyers. They're not willing to bid more, and they're going to be happy, and they feel like they got a good value at 95. And therefore, if the price drops there, right? If these sellers start taking out 50 to 66 quantity, the 95 and 97 price, 130 quantity and 96, they're going to get to that price. Then you're going to see the bid starting inflated, right? Especially if they get executed, all of them. The bid's going to look inflated. And usually that you want to look for that at support levels, right? It's important that you pay attention to the larger levels, whether it's PD value area lows or highs or weekly value areas, extremes. You want to pay attention to the key levels that you have on your chart and how you react. If we, want to be considered an aggressive buyer, it's fairly simple, right? The market auction is going to say, hey, we're going to 100, and you're going to say, yes, I buy. Market auction is going to say 101, and you have buyers absorbing these sellers here, meaning they're eating up all the supply that's available. In order for us to get to, let's say, 107, all these orders have to be bought up with this aggressive buying. And you see at 107, you will have a really passive seller. And let's say Drew then bought these at 95, right? And he's like, man, I'm looking to, make 12 bucks on these lip balms. So he's like, I'm going to sell them at 107. So he puts his sell price at 107. And if he, waits patiently enough and the auction is healthy and progressing higher, he's going to get that fill. And at that point, he would be a passive seller and he would be resting on the ask side. Okay. So on the ask side, what do you have? What type of action do you have? Can somebody summarize just so you guys understand it? Who wants to summarize it? Who shows up on the ask?
You have aggressive
Aggressive
buyers buying it up, and people that have already bought low, maybe they want to sell it at a certain price, so they're passively waiting for it to come to their price and sell.
Okay, and then the bid side. Who's on the bid?
It is the same, but in reverse.
That's correct. So you will have aggressive sellers and passive buyers. Just imagine if only aggressive buyers were on the right and there was passive aggressive sellers on the left. Do you know how rich we could become in a short period of time? It would be so easy to trade because you wouldn't have to figure out, was that a buyer or a seller? Right? It would be pretty much an easy street to figure out. But with this, you have 4 components, right? And it would look like something like this, you know. You have aggressive sellers here, you know, you have passive sellers sitting at the ask. Then you have aggressive buyers there at 72 that I circled, and you have the passive buyers sitting at 5 there, right? Don't mind the numbers. Maybe I should think about the imbalances there on the levels, but you can see that you have 4 components to it, and it's really, really difficult to decipher this only looking at one candle. What's the most important when you're looking at footprint charts is what? Can I make a decision? Can I make a decision on this, what I'm seeing? Let's say this is the candle from the daily concept. This is a daily candle of yesterday. Can I make a decision on this?
Yeah, kind of. You can see that there's aggressive buyers driving the price up, no?
Okay. So what would you do? Where would you buy? Where would you sell?
Yeah, that's a tough one.
Okay. The key component in footprints is the context. You know, footprints is not an indicator that tells you a buy or sell as a decision for you. It's literally the support to make your decision based on what you're learning, right? If you start understanding volume profile and you see where, like yesterday, we were in a typical day till 3 o'clock. I gave you guys heads up at 3 o'clock, they're going to try to make it extended. At 3 o'clock, they tried to break it to make it extended. And that comes with knowledge of how the previous day closed, where we were on the chart, right? The 4,400 on ES was fairly big level. We talked about it in the watch list. I even mentioned that I would not short below 4,400. Do you guys recall that? Maybe that I would be not really interested shorting below 4,400 because it's going to be quick, and the risk is not, the reward is not there. There's a lot of risk, not enough reward. Because the next big level is 44.25 to 20 zone, which was really, really big. So for me, that was where the market, I was making decisions, but the context of that was important. And when you look at footprints, and we'll go there soon, you will see that it did not make sense for me to, short it below that. Okay. Any questions on this? Is there anyone not if you don't understand, I'll go 10 times and repeat it. Is anyone not understanding this?
Would you mind going one more time? I'm just trying to take notes on this one.
No problem. So
Thanks,
think about it. You're in a market auction, here you would have price, right?
Mhm.
At price at 100, right? Let's say, do you have a hobby?
No, not really. Right.
Okay. Let's say you like to sell drugs. Okay.
Okay.
And favorite drug for Drew is cocaine. And I'm just kidding, FBI. This is a joke. It's an example.
Okay.
If you're selling something, let's say you're selling, PCs, and you have a NVIDIA 3080 graphics card, and you have a lot of it, right? Like recent events that happened. And the graphics card, typically MSRP is $500, but due to the huge demand and working from home and whatever, the price now is $1,800, and you have inventory of 1,000 of them. And you have people buying it here, offering you that price. You bought them at 500, they're offering you $1,800, and they're buying in abundance. For you as a seller, your goal would be to offload that inventory.
That's
So
right.
you're gonna go on eBay, right? eBay is a really good example because they have that. I believe they still have it. I don't know, auction.
Yeah, the bid
Like,
action. Like,
yeah. So let's say you had NVIDIA graphics card and you can put the starting price, right? Let's say you put $1,200 starting price. If that price was perceived low on that graphics card, you would have had some aggressive bids coming in, like, 1,200, 1,250, and the bid on your item would, get a lot of attention. And
Mhm.
if you don't trust me, just buy something that's, let's say, do an experiment, right? If you have an eBay account or something, I did it on Facebook Marketplace, if you guys recall, for you guys, where I had the wine cooler.
Yeah,
Uh,
I remember.
it was a $500 wine cooler. I put it for $50. I could not even keep up with my messages I had to take it off. So there was a lot of aggressive buyers when the price of the product was perceived as low. So the aggressive buyers, even if I then moved the price to 55, 65, if it was a live auction, it'd be 75. And at one point, people would slow down and not buy it, not offer much more, right? And same thing happens in eBay. If you watch those last moments and just YouTube it, last moments of an auction, you see not as many bids, but you see sporadic, hits, like $10 or $5 more, but just a little bit to win that auction. How many winners do you get in an auction?
One.
It's only one. And that's why it's important to know that that's a completed auction. A completed auction is when you have one buyer or one seller, right?
Got it, Chuck.
So, and that's where, you have passive sellers, and if all of that inventory is depleted, you're going to have a good, completed auction. If that inventory is not depleted and all the passive sellers did not get rid of their inventory, it's not going to be completed. Most likely you're going to come back and revisit and go down. If you were selling those NVIDIAs, let's say you had a set price, starting price of 1,800, but I came to you and I offered you 1,500 for 50, and you accept it, at that point, you would be an aggressive seller because you're selling at the bid. I'm
Got it,
giving you a price and you're accepting the price lower, therefore you're an aggressive seller. If you said, no, screw you, Shorty, I'm going to keep the price at 1,800, that means you're remaining a passive seller. You believe in the product that you have and the value that's in your hands, and you're just going to wait, and auction's going to lead back to it and chip away from it, right? You might not get 50 at once, but you're going to get 10 times 5, and you're going to get 50 eventually. If that makes sense, right? And then
Got
if
it, Chuck.
you get rid of all of your inventory of your NVIDIA graphics cards at the top, what would you look to do?
I'll go and look to buy very lower and repeat the cycle.
So you would be a passive buyer. You would look at,
Okay.
you would be looking
Got
at
it.
the prices of those graphics card, and you'd be like, okay, well, I know a guy from China that they make them over there, right? And I can get, if I buy abundance, let's say I buy 500, he can give it to me at 550. Right. So if you do something like that, that means you're a responsible buyer, right? Responsive buyer, and you're going to be buying as a passive. Responsive buyers are passive buyers, right? Because the same with you in a store, right? If you know Thanksgiving's coming up, right? We're in September, and you need a new TV. If you're a responsive buyer, are you going to buy a TV now?
No, I'll wait for the deal or whatever the price.
Yeah, human nature, most people are gonna care, wait. But let's say you're sleeping on cash and you're like, man, I don't care, $700, $800, $1,000 different. I'm just gonna go buy it now. That would make you more aggressive. right?
Got
You
it,
want it now. You want to get in now. You don't want to wait till the price reaches your point. And that's the 4 components that we just covered with your example. Does that make sense?
Yeah, Shorty. Thank you so much, Shorty.
Mm-hmm. Okay, so footprints. Woo, big difference, right? Left side is what you guys typically see. And it's just candles, guys. It's these are Japanese candlesticks. Does everybody know how they came about? The left side here, you know how it was invented? Nobody knows.
Not
Don't
me,
Google
no.
it. It was invented by a Chinese rice trader. He was the best rice trader over there. So I'm sorry, Japanese. He was
Japanese. Yeah.
basically a rice trader, and he figured out how to figure out the supply and demand and plot it on the chart based on basically footprints. I got this much at this level. I got this much, and he would conclude that price action with these candles, and he was able to know when he should sell, when he should be buying. Based on that, and he was really good at it, and he developed some patterns based of, you guys have I know a lot of patterns of candles in my head. If you guys need them, we can definitely add them in here. But there's only a handful. I only use 3 or 4 in terms of candles, right? Single or double candles, I use few. Like abandoned baby, tops, bearish, bullish. I can add those, but yeah, he invented those to help him with trading of the rice. It's actually pretty cool. I can post you guys a link on a documentary on it. Just to kind of understand it if you guys care. Okay, same chart is on the right. So if you think about, for instance, let's say this candle right here corresponds to this candle over here. How would you know where the highest volume was on this candle?
Yeah, you wouldn't.
You would know that the candle had a really high, you guys can't read it, but if I bring in my face to the monitor, I can. It's 1.8 million contracts on this candle. Tell me where's the highest? Just looking at this, you guys
The top
can't.
of the top of the
Oh,
wick.
you can while looking at this, right?
Yeah.
So, and you can always assume that aggressive sellers are coming in on the wicks, right? That's where a lot of liquidity and excess happens on both ends. When you have we'll cover this. There's a slide that explains it. If you have a wick on the bottom, that means seller stepped in, but then the buyers came in. Usually other time frame buyers come in and create these, right? So here you can actually pinpoint where it was. It was at the top. And then if you look here, the price, I know it's tiny, but if you can zoom in, bring your face to the monitor, the price never really auctioned above that POC again, right? So it's telling you there was a lot of aggressive selling. The volume confirms it. I'm just giving you an example from this, which was not intended to, was just to kind of show you the difference. But the volume confirms it, because the first question is always, what was market trying to do? Did we shift with volume? Was the volume confirming the price action? Because remember, if you offer me your NVIDIA card at $5,000, you can offer it all you want if there's no buyers there. And eventually, what you're going to have with technology is what? Does anyone know diminishing value?
A depreciation or a failed auction. I don't know.
You don't think NVIDIA is going to release a better graphics card the year after?
Oh yeah.
And your value of your graphic card, it's going to go down, because what's going to happen to the demand for an old graphics card?
Goes down.
It's going to go down. Therefore, if you want to put the price at 5,000, and the price discovery is telling you, hey, this is too much, there's no demand for it, and you don't react to it as a seller, and maybe you might have to lower the price and become a little bit of an aggressive seller, you're not going to do well. And it's the same type here. And on footprints, we'll get into it, we're able to see that almost like an x-ray, what's happening behind each candle. And a lot of times, right, I don't know if you guys know, I keep my regular candles, but I also have footprints and I look at them at the same time. I'm not saying one is better than the other, but I use them together to plan, right? I can spot, you know, it's much easier sometimes to see the support and resistance on regular candles versus footprints, right? Because you might have a lot of stuff on it. So I use both in conjunction and I make my, you know, theory or thesis on which way I want to go. So the delta component, right, of the footprint charts, that's the little box on the bottom that tells you whether something was green or red. Does anyone want to take a guess what that is and how do you calculate it?
Cell volume minus by the ask minus bit. Negative delta or positive delta.
Yeah, that's as simple, honestly, as it gets. So the delta shows you the aggressiveness. Remember this slide that we had here? If I'm buying at the ask, is it plus or positive? Oh, I'm sorry, plus or negative?
Plus, I think.
It's gonna be plus because you're buying aggressively. It's +1. Does anyone? Okay, well, maybe not. Does anyone know how to count cards in blackjack?
Let me show you.
No.
Okay. Well, I do. It's the same concept. +1, -1, neutral. A neutral trade would be what in trading?
Buy and sell at the same price.
It's a,
Failed
it's a,
option.
it would be the limit. It's the when the limits are
Got
just
it.
trading and it's in the middle, and you know you're not really aggressively moving the price. I sell a limit here, buy a limit here in a tight range, and you're really not aggressively buying. You're content and it's consolidating. And there's algorithms that are made for that, right? Where you know they're not really bid.exe executables, but they're rather just like consolidate executables, and they basically just stay in the range and they're not trading. And the same in in counting cards. You know, you have a big card, ace, king, queen. Those are plus or -1s, right? And depending how you're looking and accounting. And same in trading. Aggressive buyers will give you +1 on the delta, and aggressive sellers at the bid. So what the footprint charts do here is basically they look at how did the trade come and finish, right? Did it come in at the ask and did the price, you know, go up or down? And they mark it as +1 or -1. And is this the holy grail of trading? No. Is there a holy grail in trading? The answer is again, no. The context is what gives us the edge in trading. If, you know, if I was an idiot and I wanted to go to casino and make, let's say, a couple of $1,000, I could do that. What is the risk if I go to casino and do that for me?
That you lose more than that you win.
There's the risk that, but if they figure out that I'm counting cards, I'm probably gonna get an ass whooping.
Oh, sorry. Yeah, they beat you up.
Yeah, exactly. So I have a lot more risk going in there, and you know, I used to play a little bit in Vegas, and you know, it was scary. I played in Colombia, you know, in the casino, and I was up to $300, and the guy was like, "We need to talk," and I was like, "Hey man, just take the money. I'm leaving." Like, and it's that concept, right? Is the only thing that you don't have the risk here is the physical damage you can have understanding these deltas, guys. Green delta, positive number. If you're trending up, do you want to see a green delta or red delta?
Green.
You want to see a green delta, that means you're buying with the trend and the trend is aggressive. If you see a red delta as you're going up, what is that telling you in the auction theory? What is that telling you?
Anomaly?
Anomaly, but tell me what's happening. You're bidding higher, but
It's
the deltas,
weakening.
they're offloading the inventory at that point. That means you're buying aggressively, but just think about the concept, right? You know, here, you're buying aggressively. Let's say you're hitting market buy, but the price is not breaking this level. What does that tell you about this level? There's probably something called, you know, they're called iceberg orders, right? There's somebody, an institution or a hedge fund or a pension fund or somebody that's been given an order from a client, sell all of it at this level. And if they have 560 and we're getting individual traders, let's say retail usually, I would say they have a bunch of ones. You know, algos are programmed to buy one sometimes. Why? Why would they do that? It's not typical, but why would the hedge funds buy in quantity of one or sell in quantities of one rapidly?
To see what happens.
Okay, anyone else?
Is it
Drew,
to
what?
hide their orders, maybe?
Ah, there you go. So the intention of the big boys is if, let's say you have a friend that works for JPM and they're like, hey, we have a stock, we're going to buy 25 million shares tomorrow. What would you do tomorrow?
Calls.
Exactly. So their intent is for you not to be their competition, right? If they're selling, they don't want to see you. They don't want to give you a note. Hey, we're going to sell aggressively here. So they can play the trick where they sell 1111 aggressively, and that delta kind of just keeps increasing to the negative side. And that's what you can notice sometimes when you're seeing, you know, the delta going slowly red and all the individuals are coming. And then, you know, when you're breaking at the key level and just go back and, you know, on footprints and look at it, you'll see typically when you break a support level, what is it that you're going to see? Well, let me ask you instead of me answering. It happened yesterday at least 3 times. When you're at a support level and the price is wanting to go lower, what is typically that happens on the footprint charts?
The aggressive sellers come in.
Gonna have aggressive sellers. You see imbalances. You see those red numbers showing up or burgundy, whatever the ratios you have. They show up in abundance, and usually most of the time you will get 2 stacked imbalances in a row, and the volume picks up, the imbalance picks up, and they go off. And that's telling you that initiative sellers stepped in, and they basically, if you think about it and visualize it, you know, on here, you know, initiative sellers wanted to go lower, and basically what did they have to do? Instead of asking for, let's say, $100, they're like, okay, we'll take 95, man, just get me out of this, right? And that's literally what happens in the stock market. Anomalies, a green candle with negative delta we covered. It's pointing that the auction is slowing down and absorption is happening. A red candle with positive delta shows divergence to the upside, and those lead to absorptions as well. Sometimes they can have, you know, hidden divergences, right? And that's why we have the min and max delta that I use, right? You guys probably seen the setup where it's, you know, you have the volume, you have the current delta, then you have the min max, and sometimes I add the cumulative delta, and I pay attention to it. So that's the, you know, the 4 pieces that we have on a chart. The delta, just the difference between the ask and the bid. Then you have the volume, which is total number of contracts. The max delta tells you what was the highest delta point on that candle. If you're in 30 minutes, that'll be the highest delta point on 30-minute candle. If the max delta was, let's say we're going, let's say yesterday we're going to the 4450 level, or 4465 had a lot of negative delta. We're going to 4465, and the highest delta on that candle on 30 minutes was 1500, but we closed with 150 at the top of that 4465. What does that mean? Can you guys visualize this or no?
Well, I think it's bullish.
Okay. Drew, what do you think? Drew's asleep.
Yeah, there's a time difference.
Anyone else want? Maybe I'm not asking the right question. If we are approaching resistance, right, and the max delta was 1600, and the delta, the first bullet there, is 250. What is that telling you?
Absorption.
Aggressive.
Was it sellers?
Resistance.
Aggressive sellers?
Yeah, there will be an aggressive seller. And where would you expect to see the sellers? On what side would they show up? In that case, you're approaching resistance. Max delta was, let's say, 1500, and current delta is 250. Where would you expect to see those?
On the bid.
On the bid, aggressive sellers.
Yeah, there would be some on the bid, and you would also have potentially inflated ask. As those limit orders, they can execute it on the market as well, right? But you're watching to see how's the ask and the bid responding. What I typically like to see in that scenario is an inflated ask followed by an aggressive bid. Can you guys visualize that?
I'm sorry, not really. Could you say that again?
What I like to see when we are approaching resistance is an inflated ask and a price staying below it, and then followed by an aggressive bid, meaning I get an imbalance on the bid side. Why would I want that?
So that means you see that on a 1 minute candle, like in 1 minute you're seeing inflated ask, and the next 1 minute candle, the bid is aggressive. Is
That's
that what you mean?
exactly it. That's exactly it. I want to see that all those orders got hit and filled and the price didn't go above it. If the price got hit and we went above it, we auctioned it, that means that buyers absorbed all those passive sellers. And the ask was, not as big, not enough supply there. That would indicate, right, that I have to go to where? Think of this. If we are at, let's say, 4465 is this 100, and this 7500 here is absorbed, right? And we auction to 101, well, that means that these sellers got absorbed. And they're pushing that the aggressiveness on buying is higher. If you come in and this ask is, let's say, 500 here, and market buyers are buying, but these guys are selling, that means the ask would be inflated because it's passive sellers, right? But if the price doesn't go higher, that would tell me that, especially following candle, if I see an aggressive seller, what is the seller thinking then? Hey, I wasn't able to get the inventory out at 100. There was nobody willing to buy it higher or at my level. I have to get rid of it. Does that make sense?
Yes.
Can you explain that one more time?
Yeah. So same concept I talked about. If you're approaching resistance on 4465 here, and you have a large order sitting there, client said sell 75,000 contracts of ES. Well, if you have market buyers coming in here and the ask on the, on the footprint chart is going to look like a larger number, but the price never went above it. And then the next candle, you have a bid, red number, or imbalance, right? You read diagonally, you will have an imbalance that's signifying the guy that was maybe sitting there and he did not get all his sell orders filled. Now he's trying aggressively to sell it at bid to get filled, to get out of his inventory. And that's where the aggressive sellers come in, and that's how the delta, that's at least how I trade. I'll look at that ask, see if it's inflated versus bid, and then I'll look for confirmation on aggressive selling that comes in on the footprint chart. Does that make sense? And I'll show you guys live.
Okay, yeah, thank you.
Any questions on delta? Does everybody at least understand the components of it?
Yeah, sure.
Okay.
I do have a question actually. Sometimes I watch the oh my gosh, I just
Okay.
forgot the name of it. The other chart that Rocket always has up, and
Heat map?
yeah,
Book map?
that one. Sorry. And sometimes it has the delta like in a percentage, like it'll have the min and the max like as a number, but then the delta as a percentage. How do you like? Does it really make such a big difference, or I mean, obviously it's the same, but was
No,
just
I
kind of
mean,
curious
you,
why.
you don't know the volume. You would just know the percentage of the delta is it red or green.
Okay, yeah, that's why I was like
Yeah, that's
a
the
little
main
different.
difference. Yeah, I don't use percentages, but you definitely can. I just don't like it.
Yeah, I like the number better too. I was
Yeah.
just
I
curious
do
why.
the mental math in my head, right? Especially like in this example, I kind of gave you similar. Max delta was 1500. Candle closes at 25. I mean, we had to go from plus 1500 down to 25. That means what? What does it mean for the 1475?
And there's a lot of aggressive selling.
Yeah, a lot of aggressive selling. That means a lot. 1475 were sold at bid. That means it's absorption dependent on the context, right? If this is happening at the resistance, that means somebody's offloading the inventory, right? If this is happening at the bottom, that means the auction, there's no interest. Most likely we go lower, right? And same is true for the opposite, right? I don't have to cover that. But, the variation of these scenarios, there's a handful of them, right? If the delta is staying somewhat neutral, if you use 30 minutes on ES and you're seeing, let's say delta 2-300 on either side, that's fairly neutral. That your 2-300 orders from flipping, and they're not showing you a hand. You don't have any advantage of seeing that unless you see the max and the min was drastic difference. But if it's staying within 100-200 points of that in RTH, like regular trading session, that's not a big deal, right? So, and the more you learn to use your time frames, the better you're gonna know the averages. You guys see me a lot of times on what time frame on footprints?
30 minutes.
I'm always on 30 minutes. I'll
Mm.
switch to 5 minutes to look for potential entry to see if there's aggressiveness, because it will show me reactive level of those buyers and sellers much closer. On 30 minutes, it might not mean much, right? Because they're going to be in high numbers, much higher numbers. But if I go on 5 minutes, I can jump in with the guys that are reacting short term, meaning, their anxiety level that we talked about is there, it's active. And I want to go on with those guys, and then you watch the tape and you get a confirmation. Okay. High volume notes. This is no different than volume profile, guys. Literally same thing. If you go on footprints daily, it's gonna give you a session and basically a profile of a volume profile for daily. Do you guys understand that? It's the same exact thing. The only thing is that on footprints, you will see the bid, price, and ask on each level. Does that make sense? On volume profile, we just see volume at that price. With footprints, we're able to see how was that volume broken down. Was it at the ask or the bid? That's the difference, guys. Nothing else to it. Does that make sense?
Can I ask it?
You're here
Can
to
I
ask
ask a
questions. I'm
question?
here to answer as many as I can, man. So don't ask, can I? You just shoot.
Just to make sure if I understand, but I read that some parties they put like resting orders in, so other people see those orders, think there is resistance, and when price gets there, they take it away. So sort of to trick you. But by looking at the delta, you can't be tricked. Is that correct? Because in the end, that doesn't affect the delta. Those
Yeah,
orders that are
resting
put.
orders don't affect delta, right? So the delta is generated by the orders that were executed. What you're looking at, does anyone want to answer? What's that called? When you see the orders and then they go away?
Vanishing.
Ghost orders?
They're called ghost orders. So what they do, I mean, think about it. They know the power of people using volume. And, usually, level 2 gives you 10 levels, right? On a tape. If you use level 3, I don't know if anyone has access to level 3, I do, but if you look at level 3, you can see resting orders, man, a lot farther down on the price and lower, right? That you can see a bunch. But does that, as an intraday trader, do I care that there's a resting order at 2200 on ES?
No.
I'm sorry, but I do not give a shit. Do I care for my kids and the 401ks and my cash account, that's building? Yeah, I do care about that.
Yeah.
So for resting orders, when you see it intraday and being moved, it's important to understand those resting orders. How was the price there, and what did the footprints do there? What did the bid and ask act before at that level? Was it if it was, let's say, let me give you a scenario. You brought up a good question. If at that level where the ghost order was a failed auction, what would you expect?
Expecting what sense?
Would you expect us to have more supply there or less supply?
More and
It's
more
a failed
supply.
auction.
You're probably gonna have some more stuff there. It's unfinished business. If you're at that level and you saw a completed auction, well, now you're gonna need initiative buyers to come in and sweep, meaning they're gonna auction and do a price discovery above that, usually some kind of extension, right? So the context again, was it failed, or was there, what kind of bid and ask did we have there? Did we have an imbalanced sell at that previous level? And is the ghost order sitting there, or a large order? Let's not call it ghost. If a large order is sitting there and previously it was a decent sell off and it's a failed auction, high chances it won't be a ghost order, right? And that's how that is established with the resting orders. Resting orders on L3 create supply and demand zones as long as there was action before there, and meaning imbalances happened from that area of balance. Does that make sense?
I'm completely new to this, so
That's okay.
it has
Ask
to
away,
sink
man.
in, but I'm doing okay. I think.
So the resting orders are basically people being passive sellers or passive buyers. And let me ask you this here. Is there any hobby you like? I'll give you an example to simplify. Do you buy or sell anything? Do you like to trade anything?
Well, I used to play poker, but you can use that.
Well, okay. Let's say you like to sell. I'm looking in something that's a niche market. Let's say you like to sell customized AR guns. Okay, like high caliber, distance shooting. And if I tell you the government's gonna ban the sale of guns, what do you think will happen?
I would try to sell
Everybody's
those
buying them.
as quickly as possible.
Okay.
He would no
Anyone else?
longer be a passive seller or buyer.
Say it again.
He'd no longer want to be a passive seller or buyer.
Okay. Would he lift the price up or down? What would you do?
I would lift it down.
Okay. Anyone else?
And we lift it up.
Possibly.
Last time the government talked about, stopping the sales of the guns in America, go look up what happened to the stocks that deal with guns.
Yep,
It
the
exploded.
prices on them.
Everybody would want to buy a gun before it's banned.
Ah, there you go. The context is important, right? If you lived in, and I'm not getting political, if you lived in a communist country, would you buy it?
A gun, yeah.
In a communist
Oh,
country,
hell
it's
yeah.
different. Well, you say hell yeah, but they also have much rigorous punishments for people that have guns in their homes. My parents lived in a communist country, and you're not allowed to have a gun. So if they
Oh,
put a
I see what you're
ban,
saying.
most likely not. In United States,
Okay, yeah, then
in United States, if I tell you there's a ban coming on the guns, the supply is going to be limited. The demand is going to stay rocket high because the context and the nature of this country is the freedom. And I'm not being political. I'm just giving you an example how to think differently. for you, if you're the seller of those guns, you're gonna say, well, I'm not allowed to produce more since I have this inventory. I'm just gonna try to get rid of it. But for people on the other side, they're gonna be like, man, I have to go buy before it's banned. You're gonna find equilibrium of that price, and you're gonna have buyers come in, right, at abundance. In the context of our country here in the United States. But if anything changes, right, it's going to be the opposite, right? But it's dependent on what you're selling and the context of the market that's there. You would be looking to sell those guns if the ban was to happen, but I don't think you'll become an aggressive seller. You'll become a greedy seller, and most likely, you know, if your price was 1,500 per gun, you would do what? Typically here, they would move the price from 1,500 to 2,500. And you guys all experience that. Doesn't matter where you live. If you go look at cereal boxes recently, and there's a lot of studies on it right now. What happened to it's called shrinkflation. What I'm trying to explain is you're buying same cereal you're buying as before, and the price they're saying did not change. What did change is the
The size
quantity.
of the box.
Quantity.
The quantity they're giving you is less, but you're paying more. So if you're selling the gun, same gun, you're not going to have the same quantity to sell. Your goal as a seller is to sell it for more to make up for it. Right? So that's why, you know, the aggressive sellers, right? And those ghost orders, if you have a ghost order and some information changes, remember, it has to be information or some kind of discrepancy in the market where it's like, okay, the value is much higher for this right now. And the value was higher on that gun because there's, you know, a ban on the guns. Therefore, as a seller, they just literally move the, you know, from here, they're like, man, I'm no longer at 100 now. I have to sell it at 108. So the price has to do what? Most likely is going to accelerate through this because there's no selling here. If nobody's willing to sell the gun for 103, 104, and a lot of people are selling at this level, the price is going to fly through it because all those orders, all of the supply is going to be bought up quickly. Does that make sense?
Yes.
And the same thing is going to happen now with Apple iPhone. It's going to be a really interesting event to see. Like, I'm waiting just to see the results, not to buy the phone. I just want to see how is it going to react. New iPhone coming out before, if you guys just Google iPhone trend release on Google, this is the lowest trending Google Apple iPhone ever. Why is that? Well, you got to think about the context, right? Where the economy is, how many jobs people have to work just to pay the rent. And you really think they're thinking about the iPhone? I doubt it, right? And I mean, the data is showing that. And that's why, you know, you look at Apple, it's been in a sell mode. It's been in a sell mode since 190. Okay. Let's see. Does that help at all? Does that help explain it in layman terms?
Yeah.
Okay. All right. So high volume nodes is just a concentration of volume. Like, where are we trading? Is there a high volume node somewhere? And I can give you guys a quick example actually here. So here's this chart. Changed colors last night. Where's a high volume node from here to here? I'm asking
From where?
you,
Sorry.
from this point here to here, where's the high volume node? You're gonna have two.
Probably at the bottom where you started, and then right at the very top.
So
Or
this is the profiles that I'm on. Let me just hide them. Are monthly profiles. So each one of these here is a monthly volume profile. So now I'm looking for high volume nodes. So let's say I grab this FVP tool and I just grab this. And what you see is exactly what, you know, a naked eye should have caught, is that you're seeing 2 months and POCs are lined up next to each other, and you see what on the price, right? Look at this.
Overlap.
There's a lot of consolidation. They're just basically, they're happy buying and selling. So if you go back to the PowerPoint, right? Imbalance. Is this balance? Definition of balance? This is definition of balance. They're buying and selling here. Have they confirmed this balance yet? Not yet,
No.
right? From the bigger price point, it hasn't been confirmed. So they're going to have to find, we would go here and we would find that value area high of this FVP. Excuse me, I got hiccups out of nowhere. You would find the value area high, right? And, I won't skip the steps, but, you will have 2, 3, 6 here, right? To identify this. We would change this to 95, 99, find those 6, and that area most likely becomes the balance point on the retest, right? So it's somewhere around 4180. I thought it was around 4200. So somewhere around here, you would have that confirmation, which would look like either we're going to do the left, the acceptance, or what? Rejection. So the price will have to come in. I'm just going to use structural highs at this point. So the price, when it arrives here, what would you expect? The price is either going to accept that we want the price to go higher right here. This would be the potential long. And on footprint charts, I'm combining everything we covered so far. I would look for what? Where would the orders come in? At what side am I paying attention to see if they're, coming in on a bid or ask here?
The ask.
Ask.
Anyone else? Let's take a look at where the passive buyers show up usually.
Side.
I would look for, if I'm approaching this level, I want to see if the bid side is inflated. How many resting orders were there at this, let's say 4230 level, and then, looking at cumulative 2 months at 4140. I know this level is huge here. So let's say if you're coming here, I'm looking at the bid to see if there was resting orders, if they're going to drive the price higher. Most likely they would. Then, if they fail underneath, the failure would look like this. They would go under, and this would be, where would be the short signal? The short signal would be the value area high of that area here. So first long with the proper stop loss, and then the short area. And this happens over and over in smaller time frames as well. Okay. Any questions on this? Let me go to slide 21. So high volume nodes, this will be your high volume node, right? So if I grab it, it's here. It's different for different time frames, right? So if I grab top to bottom, you see, there's a high volume node here, right? You guys see it. So this would be a high volume node. This is where a lot of volume happened, right? And look what happens. This is also June POC. They came back. It was support. It became resistance for a little bit, and they quickly reclaimed it here. Does that make sense? Maybe I should use ES. This one here. So you guys can resonate with levels. Does that make sense? So in this case, the June POC here it was support at one point, and you see it here now becoming, support, a little bit of resistance, big bearish engulfing. They sold off, and now, you're anticipating to see what happens at that 4420 level. Okay. So high volume nodes, footprints, I would say covered. Imbalances on footprint charts are basically showing you if one side was more aggressive than the other side, ask versus bid. If you see somebody on the ask that's 3 times the amount than the bid, and price is going higher, it's going to be highlighted as green, and it's going to show you an imbalance. Okay. I have the rule that you really don't counter trade the imbalances, meaning if you see a buy side imbalance, don't go short, right? And same rule would be applicable on the bear side. And the second rule is never break the first rule. Okay. If you're gonna have these imbalances, you want to make sure that there's volume increase. Because remember, if you're breaking a level, you need initiative buyers. Something has to change in the market. Either that market auction is starting a new trend, and we're going to go higher, but we need, we need abundance of buyers that believe the value is low and they're going to buy it up aggressively. And then the last piece is make sure the delta is agreeing with this. If you're, going up higher and imbalance is there, right? You want to make sure the delta is also going in your favor. If it's going up, green, going down, red. Okay. Imbalances do become kind of like flip zones, right? If you had a buy side imbalance and you don't respond to it and you go below it, most likely there's a high chance that it's going to be used as resistance. Why would that happen?
The initiative buyers didn't show up.
Yeah, but think about just price and live example, right? If at one point there was a lot of buyers there and then we went through it, there was not, like you said, there's not a lot of responsible buyers sitting there to buy it. Now we absorbed all those buyers. Well, that level where that fight was probably had a lot of sellers come in. So those sellers will now defend that area instead of the buyers because they lost the price. Okay. That's the idea. I'll show you guys an imbalances right here. I'll do it right now. So if you guys go on NQ, let's see, I'm gonna hide this. Do you see these red numbers right here? Let's remove. Do you guys see these red numbers? 77 to 24. How many times does 24 go at 77?
It's 3-1.
3 to 1, and it's highlighted. How many times does 12 go in 50? It's kind of like a hard math, right? But every time there was an imbalance, they highlighted. A stacked imbalance is just the fact that there's two of those in a row that were highlighted. So for instance, if you look at NQ here, there was a imbalance right here at 301, a pretty aggressive one, right? And if you look here, we had the delta here, and I think I mentioned this level here on it a few times. As a support, and then once you lose the support of such magnitude, you want to lose it with what? I mentioned it earlier.
Aggression.
You want to lose it with aggression, yeah. The key is that you see something like this. And then you see what happens here. They sold off, then they danced a little bit, and I'll explain this in a moment. They had a failed auction here. This is only 10 minutes. Maybe I can go 30. And you see again, let me hide this. There's an aggressive seller sitting here again. Here, and look at the delta. On the right side is the corresponding delta at that level. And I can explain how I created, but that's the easy part. Understanding is more important. So here, if you look at it, they really started selling from here. And in this area, I would say you had a couple of, POCs of the candles. So if I was to turn this off and on, again, the same question would be, where's the highest volume on these candles? You guys have no idea. You have open, high, low, and close. Just looking, that's the only 4 points you have on this candle. Right? And in between them, you can figure out the volume, right? The volume bars, but you don't know much. Now, if I look at this, I see, if I was to just grab the volume profile tool, right, and look at this area, it's going to spit out, right, a volume POC. And look where the POC is. I mean, right here, you had the positive delta of 924 on these, right? At that level, for the past 1 month, the delta was positive. But the price went through it. What does that tell you?
Strong selling.
Anyone else?
Can you ask that question again?
At this level, the delta for the past 1 month is positive 927. Positive delta means what? That there was a lot of aggressive buyers at this level, right? Otherwise, it wouldn't be positive. Make sense or no? We
Yeah.
talked about it.
Yes.
But now the price is below this. What would that tell you here? And you see them, they try to defend it here, and look what happened here.
Those buyers left and aggressive sellers came in.
So these buyers got trapped on the long side, right? And then aggressive selling came in with the delta of negative 1300. So they basically trapped the buyers here, and then they sold off and they went below that level. And then you see there's a lot of aggression in between, with some buyers being trapped again. They came in here, they had some volume, they built up at 288. I thought it was 285, but okay. They had some, volume there, and then they sold off, I guess, again on NQ. And now, as you're approaching here, right, you can quickly see where's the balance that created this imbalance. Meaning, market goes from balance to imbalance. Where's the high volume nodes that trigger the buying? Well, if I go on candles, and if you look for consolidations of these candles, right? Where is it? So if
15
this
to
was
70.
yeah,
240.
if this is our balance, then this is our imbalance, right? And now if you take a look at it, let's just extend this. Look where a lot of volume happened. Look at the delta. Where did it happen?
240. Yep.
Right at the zone that we're targeting, right? So if I was to just even now go with volume, this is delta. If I just go with volume here, and let's say I can maybe even do this. So a lot of selling happened here at the top, which is much bigger than the selling that occurred at the bottom. If I look at only this consolidation here, I can find out that where the volume was as well. And look where the volume is. It's literally right here at the same node at 238.
Is that like lighter color green? Is that the POC right there, or
Which
just
one?
spot?
The yellow one is the POC of the volume. That this whatever color gold
Yeah,
is
that
the
one.
delta POC. So highest volume and the highest delta occurred in this range here between 241 and 237. So that means
Okay.
it checks out, right? And yesterday, I don't know if Yankee's on the call here today. Yankee, remember you asked me on NQ is the long. You asked me if the long was like, I believe, like I think we're at 270, 280. And what did I tell you?
No, you said no.
230, 240.
Was this the answer?
Yep.
Yes, 238, 240. Yes.
Yep. And now well, I said it. Could you have scalped these levels in between? Yeah, but why not play something that has a higher probability than what we're being offered? What happens if it doesn't happen? This is where you guys struggle. Okay, it doesn't happen. Not much I can do, right? So your job as a trader is to sit and wait for your theory to work. And if you look at this, they bounced here, became support. You're coming back to it again. You had an imbalance from here. And this last balance created what structurally? It
The high volume node.
made a higher high. It took out the previous high, had a close above it, and then they sold off. So now you can expect this not to go as low here, because it most likely needs to make what?
Higher low.
Higher low.
Low, higher low.
So we would expect a bounce somewhere around here structurally, and the delta is telling you the same thing. Okay. So does everybody understand imbalances? I'll go here on a footprint chart so you guys can. Is there anyone that's confused about imbalances?
Is that Quant Tower that you're using now?
Yeah, this is Quant Tower. So imbalances, if you want stacked imbalances, right, you can change settings on it. You can have the 3, 6, you can have 9. show stacked imbalances, you can show it or not show it. And, you know, if I do 2 zones, it's gonna bring in a lot more imbalances. Like you see here, it brought back that imbalance right there. Highlight it, and if you go in like 10 minutes, it's gonna pretty much highlight probably a lot more. Let's see, so there's the 39.40. Sometimes it doesn't highlight these, not sure why. But you see now that there's a stacked imbalance at that 300 level. And if you come back to it, we already had 1 tap. But if you come back to it, you can expect probably to go a little bit higher, and then losing that also becomes a very good trade, because look above and fail is always my favorite. But these are your stacked imbalances where the aggressive sellers or buyers, like in this case, you see here how it worked. They had aggressive buyers. They did what to the price? They made higher high. On this candle here, you had failed auction. And you see here, again, with the imbalance, they broke that. They're interested in price discovery higher. They came back, and what happened here? A completed auction at
Completed
370,
auction.
and some asshole got filled there with a short. His name would be Drew.
No.
And you see how that worked. We are both, you know, anticipating that short right here. One got filled, one didn't. But look at the bounce from the imbalance. Pay attention to this area right here. This is your aggressive sellers. I'm sorry, buyers, and they're paired 70 to 20, 170 to 48. You don't read this horizontally, it's diagonal. And we are right above a completed auction here. Right? So that's your completed auction. And look where the bounce came. We popped higher, and look what this. 324 all the way to 365, 45 points. Right? So then once you lose this level, most likely you're going to go to the next buyers. And I think we had actually identified each one of these levels when I was trading live yesterday, how they're going to hit, you know, to a penny. I would say most of them, they hit, react, hit, react, and so on. Okay. Anyone not understanding imbalances? They happen on bullish and bear side. If you don't, it's much better to say no, I don't, than it is to go off tomorrow not knowing what it is.
Can you go over it
Would
again,
you
please?
mind?
If you don't mind?
Yeah. So if you look here, all it means is that there was a buyer basically that was more aggressive on getting the product. In this case, ES5 NQ, you know, 100. So in this case, 358 was overwhelming for the 92 here. So they're able to move that price higher, right? So they moved, basically, they absorbed any sells that was on the ask side here, they're able to absorb it and shift, but that came in abundance. It came in an imbalance of the orders. And you see here, right, if you just look at this, if you just pay attention to these major imbalances, look, you came here and look what happened. You got a major bounce because this is where the aggression happened on the way up. And this guy here is most likely going to do what when the price comes back to it? Or a woman.
Defend it.
And it,
He's going to defend it. And the people that were, let's say, short from this level, what are they going to do here?
Just get out of the way.
They're going to do short covering, meaning I was -1, now I have to buy one. Right?
Shorty, when you say defend, do you mean that he didn't get filled
No,
everything
no, no.
so that he's still...
No, 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 no.
Oh.
That means everything on the footprint charts, what happened already. There's no resting orders here. These are all as they happen, the market live. This is an auction here. So that means this guy bought 358 contracts at this level. What is this? 390. So, or yeah, 389, 390. He bought 358
Right.
contracts. So let me ask you this. You bought, let's say you bought iPhones, right? You bought 1,000 iPhones at $300, right? Let's say you sold some here at 500. Price is coming back. You still have some inventory. Price is coming back to 300. What are you gonna do?
If I think pre-under the
Buy.
value, yeah, I use my profit to buy new inventory.
You're gonna buy new inventory and you're gonna try to sell again at some point where you had sellers, right? So if you had, you know, a good price level to sell, you're gonna drive there and you're gonna look to sell and you're gonna make sure you get out. And that's why the defending is important, right? He bought here and he's just defending his position. And somebody here, maybe same guy, same person, same woman, came here, had a little bit of aggressive buying here again. And you see that they defended even this level. Just zoom in. Popped, look where it came back. 13 and it bounced. I think we actually played this. I'm not sure, but I think we played. I know I played 13 multiple times yesterday to like 20, 25. Maybe it was somewhere around here, not lunch. But yeah, the idea is that they're going to come back to these levels and defend it, just like this imbalance here, right? And then you look at, for instance, let me zoom in. I don't know how visible this is for you guys, but what happened here? You had selling, then you had you know, some, I would say, aggressive sellers came in and they got hit by this imbalance. And then this probably might have been driven by what? If you're able to, if you're really short here, what would happen here above it?
You cover.
It might be a cover, right? And, you know, I can't tell right now. It's much easier to tell when it's live. But it could have been driven by a cover rally where they spiked it, right? And all these people had to close their trades and they closed the trades. And then you see that quickly came back, right? It didn't really go too far, didn't make higher highs. And then if you put this around this right here, and I'll just extend it right here real quick. Let's see how that level did for the remainder of the day. Look at this. You had these sellers and they brought it back up here. And what did this guy say? He said no once, no twice, and then whoop.
So what you pointed
Yeah,
out,
that's-
is that a stop hunt then? Because
So on here, it was this one right here. They might have given them a hope and they trapped the buyers and they, you know, they might have sold a little higher. But then price was quickly retraced back inside below this level. And then here, they gave them another false hope of going higher, but you see that they never auctioned above this completed auction where the aggressive selling came here. They never even came close to it. And then when you see them, whoop, they sold off aggressively. They had a lot more inventory to sell. Their iPhone inventory was huge and they needed to get rid of it at this level. And
so
then
they trigger the stop losses of the late shorts, and then they trap new buyers, and then they push back lower.
That's correct.
Okay, understand.
So now, if you think about it, why would they want you not to be in this on the short side?
Competition.
They will go lower, so they want you out.
Yeah, they want you long so you can be their exit liquidity. Once you're out, you know, they have the ability to go. So yeah, that's pretty much it.
Buy so they can short more.
That's exactly it. If you can sell the iPhone a little bit higher, and if you see the demand coming in, but they're able to see cohesive orders, meaning they can see the delta. On the quantitative side, they're able to see the delta neutral levels on the market, the gamma, and so on. They're able to see a lot more than we are, right? On the like a clearing houses and whatnot, they see a lot more data, right? And they can much better see where the price is more likely to go because they see the supply and demand real time. What we see is what's this, right? In the volume or market profile perspective, and we didn't even have that before. So now this gives you the ability to see, hey, I see your seller aggressive. You trap these buyers, right? You see them clearing this auction here. This one never really cleared here, right? And you see here, you know, it's really good actually explanation. You had a huge candle here with, you know, I would say not, you know, the best volume. If you look at this, you know, you're dumping with 15,000 contracts, then you're coming here to the support, some absorption, right? Positive delta, red candle. then you see not the best volume, right? I would say the volume is still trending down and a green candle. I don't know what the min max at this point, but we don't need it. As you're coming here, this is your high volume node of this sell-off here, right? It's right here. So you see them, they're gonna come back. They came back very close to the retest here. And then you see the delta in volume slowing down as you're auctioning. Why would in the market auction slow down?
No demand.
Reversal.
Yeah,
There
there's
is
no
no
demand.
value.
You're not willing to buy it. There's no value here. So the demand and slowing down, and look what it's telling you, 10, 8, 7, 30% less buyers here than here. So retail, the buys here, they're like, oh shit. I called in the people to hold the candles. They light up, they bought the candle, and they're gonna hold that candle for a while. Right? And it's for others to see the light, not for themselves. And that's where the retest, I say, look above, fail retest. This was a good trade. I mean, this is a really good trade, 24, and I think we caught it. I believe I did. I think I had 55 points on this, or 50, I'll check. It was a good trade because they came back to some imbalances, and you go along, and you're not looking necessarily to every time to catch every single point of the move. You know, if you can catch 10, 15 points a day, 20 points, you will do well. And you're just looking for probable setups. If you're looking, if you're seeing the auction is slowing down, I don't know, why would you buy it? If I auction again a $20 bill or a $100 bill, how many of you would pay me $105 for a $100 bill?
Probably zero.
Well,
Reversal.
how many of you would be interested to buy my $100 bill for $5?
Yeah.
Everyone.
Exactly. So as the price goes higher of the value, I mean, monetary value of $1 is established. You know what you can do with $100. Probably a lot less than 50 years ago, but you can still do a lot with it now. But if you can get $100 for $5, it's a 95% discount. Right? So the idea is, as you're going up in the market auction, you're looking at volume, right? Based on the kind of what we covered so far. Is the volume confirming? No, it's not. They're looking weaker at the auction at the top. And then you see here, the selling, you know, took over with negative delta. And here also less delta selling, right? They continued nicely with the POCs. And you see here, as you're coming to that support, look what's happening. Volume less, delta less, and a spike green.
Reminds me of what you're now telling me reminds me of what I read in Wyckoff. That's where I started, but I really found it hard to apply that using let's say the regular volume and those regular bars. But now if you combine it with the delta, I'm seeing much more of what that guy wrote in his book.
You talking about Wyckoff 2.0 or the first book, the detailed book?
Yeah, it's I don't know if I had. It's a guy who also has sells software who wrote a book about it.
No, you're talking about Ruben?
1 second. It's Master the Markets.
Oh, okay. No, it's not Ruben.
I'll put it on Twitter. You can check it
Yeah,
out.
no worries. Yeah, but if you read the book by, I believe his name is something with the V, but first name Ruben, Wyckoff 2.0, it will complement your reading to what you're doing now. It will make a little bit more sense. I'll
Tom
post
Williams.
the book. Okay, no, I don't know that book. Okay, but does this make sense so far? I think we covered pretty much the imbalances, high volume areas we covered, min, max, delta, I would say we covered. I just can't give it to you right now at the moment because, you know, it would show up here, max and min. Any questions so far what we covered? Okay. From there, right, I explained so far the absorption, right, where it's happening, where the sellers and buyers come in and you see it slowing down, the volume, the delta itself. And then you're gonna have, in some cases, let me go on a higher time frame, see, somebody can go and mute your static a little bit. Do you guys hear the static or just me?
Somebody's got a hot mic, yes. Might have been the previous speaker.
I don't think it's him, he's on mute.
I don't hear anything, Shorty. It's clear for me.
I hear it.
I hear it.
It's buzzing for me,
Yeah, I can hear the static, but I don't.
it's really annoying, but okay.
I
Okay.
can hear it, but I don't see anybody like.
Oh, it
causing
was you.
No.
Well,
was muted.
just stop now.
Yeah, it went away.
Yeah, it's not me.
Okay. Alright, so where's the divergence here? Let's see. Delta divergence, where is it here? I'm on daily, right? I'm trying to teach you a process, not the. Where's the divergence here?
Is that at the 313?
Alright, let's talk about it.
Market 24.
Green candle, what delta is it? I can't stop.
Negative.
Negative. Okay. You have a red delta and. I mean, red
Green.
candle and
A green delta.
a green delta. So something is telling you what?
A change.
Yeah, it's something's not adding up on selling. They're, bringing the price down, but it's being bought back up aggressively here. More so than selling, because if it was selling aggressively, it would have been negative delta, right?
And on 27, that's also a.
Let me see, 27th. This one, yes, that's also,
Yeah.
yeah, that is a.
But it still went
green.
up afterwards. a
Yeah,
lot.
of course. Yeah. Remember, it's not a system where it's like, oh my God, I'm gonna short this right now. A lot of times you need the context here. So now if this happened on the negative delta right here, where would you expect to be interested in buying?
Break up the candle. Or
I mean,
below the POC.
if I just look at this right here, I should be able to find a point in this price action where, it's. I don't know why it's not increasing.
Wow.
Okay, so this will be the level based on the cumulative, right, volume, where it should be a good level to buy. And then you look at this volume of this candle, and it's fairly close to that one. So there's a lot of volume that was concentrated here, right? I don't have the min-max data, but at one point, maybe it was more negative in this case than it is right here. And in that case, the context of what you're gambler talking about would be positive, right? If this was a negative 7,000 delta and we finished at a negative 1,600, that would be bullish. Right? That means, they sold off like they did here, negative 1,200, negative 12,000, I'm sorry. And then you see positive 1,700, and then you see negative 16 on less volume. So you have delta on less volume here, and then you see a positive 8,000 spike here. So, we had a positive 8,000 spike here as well. Followed by 12. Here you have negative 8, but not a lot of, if you think about selling on Delta, not a lot of selling just yet. They're still stuck on this imbalance candle. I call this imbalance candle right here. So if you're going to go for, a long level where you can expect a lot of buyers, is they're going to come in here. It's going to be a big fight. First tap on this is not a bad long, as long as the footprints agree. If you're not seeing aggressive sellers here, you want to see some same concept like we saw in 15, 30 minutes. As you're coming to that level, you want to make sure that you have some absorption or some buyers coming in for your pieces, right, to work. Like here, like you're slowing down, you're watching the volume, you want it to be in a slowdown mode, like here, right? And you're seeing it slow down. You had aggressive sellers here But you have this buyer, he's gonna defend it, and you see here, they came in. So that failed auction, 116 to 100, not really a big imbalance, but there's some imbalance on buying here.
So, Shorty, when you go long on that buy side imbalance, so you will go and put a target on the sell side imbalance on the top side, right?
Well,
In
definitely,
the sense,
if this was the case, yes.
okay,
Yeah, I would not try to be a hero and expect this. This only happens if it's a short covering, happens, right? They're able to break it, but the odds of that happening are not in your favor.
yeah, Shorty. And on the other side, like when I try to trade the sell side imbalance, I will not go on the next candle which is breaking through. I'll just wait for failure of that sell side and then wait for retest.
Say it again, like this one or which one?
Yeah, the 37, 72, 276, the sell side imbalance on the top,
Right here?
the red one. No, you had drawn a like a
This one here?
yeah. So
Yep.
could you point like where we should take the trade? Like I'm just trying to see like
So
where I have.
I typically, I like to see, look above, and if there's a fail, right? So if I was to, let's say, you see this trade here, and you know, you want it to drive lower from here. Meaning, if the sell side is here, you want the price, you want a footprint chart, whatever you're on, to go lower than the footprint that the imbalance happens. So if this is the, you know, imbalance that we are looking, I want to see same time frame, 10-minute candle, go below this. And look what happened. I mean, you have, in this case, you have full footprint that kind of went below it. Once that goes below, now you're like, okay, now your ears, eyes should perk up. You're like, hey, I'm watching for the imbalance. Because that means that if sell side imbalance was able to drive an imbalance to the downside with a couple of candles, I would say, you know, you had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles below. And as they arrived at this level, this was a good short. I want to see same time frame imbalance on the footprints go down below. And then when you come back, that's a good short. Do not short imbalances on the same candle that hasn't completed, right? You see here, we did not get a break below this low here, and it wouldn't have worked. You want to see an imbalance drive the low of that time frame candle. Once you come back, it's not a bad short. Let's look here. Where's this imbalance coming from? Okay, this imbalance started on 9-7, right? And look at 382, right? We can zoom in and see what exactly happened. If it lets me. Yeah, so this is a decent imbalance here, right? It has nice selling. I'm only in 10 minutes, right? So now let's go to the right and see what happened. So obviously we dumped from there, right? So the imbalance is valid. There was a lot of selling there. And now you see, and look what happened. And I would say, Drew, did we call this level out yesterday?
Yeah.
385.
Yep.
I don't know if you guys recall, but this was a big level for shorting here. And you see them, they came back. Did they go above it? Of course, they typically will go above it. Why? Why do they want to go above it? Why do you think market makers want to do this?
Stop loss hunting.
Stop hunt.
Yeah,
To take out stops.
yeah, they take out the stops and they say, hey, we'll take these stops out. We'll take your liquidity out before we head the other way. Right? We'll sell it. It'll cause you to get out. And then you see a pickup in volume and delta and so on, right? So that's the idea. And can you short here? I mean, if you're shorting something that you've been waiting for, let's say, I don't know how long, since a couple of days, and you're getting an 85, you know, having a 3-point stop loss on this is not the best way to play it. Because if you're thinking about it, this is a rather, you know, a decent size imbalance, right? You don't really necessarily need to play it on such level where it's like, okay, I'm going to give it 2-3 points stop loss. You have to play it a little bit more, and what's your target, right? If you know the imbalance is, let's say you're playing this range here to the bottom. I mean, if you're looking to make 150 points and your stop loss is 3 points, is that fair?
No.
I mean, guys, you have to be realistic with your trades. If you can't handle the size that you're trading with, then you size down. Yesterday, I showed you guys with M&Q 2 times. I picked up over 40 points. One
Oh my
M&Q.
God, yes, yes, you did.
And that's because I'm able to extend my stop loss, right? I gave them a bigger stop loss on the short and the long side, and I was able to let it play out, right? I didn't give them a 1.5 points and expect 140 points. I gave them 25 points and I expected 75 points, right? You want to go in those ratios 2 to 1, 3 to 1 and look for that, right? Because a lot of you guys, oh man, my stop loss was 2, but I wanted to make $2,000. I'm like, okay. Then you should probably play lottery if you hit that every time, because you might have been, might bang on the lottery too. Okay. Does that make sense so far? We only covered footprints so far, and I know it's taking time, but I think it's more valuable to cover piece by piece in detail than it is to, if I go and cover, I can go through these slides in the next 15 minutes, guys. That's
It
it.
makes sense, Shorty. Thank you. Like it helps
Yeah,
me
this is
to see,
great.
Okay.
not
It's a
to
little
place the
different
trade
than
as
the
soon as possible.
previous session. So far we only are footprints and we're about 2.5 hours in it, right? So anyone confused on what we covered so far? If you're a gambler, how do you feel? Is it making sense? Mr. Pips,
Yeah,
is it making
you know,
sense?
yeah, it does make a lot of sense, especially what I told you about the Wyckoff I read. But it's everything new that you're trying to learn, and you listen to someone who's been doing it for years. You feel there's a massive gap between me and getting to that level. So, but I know it's not the first new thing I'm learning. So I know I have
No,
to just.
as long as you understand it, what I'm talking about right now, that's what it's gonna take more, I would say, than a month. And a lot of people in the room will tell you, Free, how did you feel when you first joined? How do you feel now?
Oh my gosh, like you were speaking a different language, and then I cried every day by myself when nobody knew. And now I'm feeling very hopeful, and I'm just going at baby steps.
Yeah. And you see when I ask questions, she tends to answer them correctly. Before,
it'll also come a lot quicker than you think. Not in a month, but it won't take that long. So.
no, I agree. I think learning this and applying it takes 3 months minimum. And we're all different, right? I'm not saying, I would never say that we are anyone stupid. I think some people are lazy and not focused. If you're doing 30 things at once,
Yeah, I see things over and over again, and then I remember better.
and
That's the key, Shorty. Like we have to learn and try to apply and see what's working, what is not working. I think I'm an
exactly.
example. I learn. I don't have time, like in the sense because of my thing. I could not practice. So that's why I just attend every session, even though I know it. Like just new things are coming up because I don't practice.
And I don't know if you guys, when you read a book, I've read some books multiple times, but every time I reread the book, I feel like I reread a new book. I feel like I understood more than I did last time.
100%, 100%.
And Mark Twain said, a person that has the best book but never opens it, it's the same person that doesn't have the book. You can have the book all you want if you don't read it and understand it.
Yeah,
You're
so
no
I'm
better.
definitely gonna rewatch this and get that one tower and see for myself. But are you also going to address like the next steps after this? So what should be the next step for us to learn more?
So obviously the first step is to have the availability of the tools. You're gonna have to go see it, right? You're gonna have to feel it. And when I say feel it, you're gonna have to trade with it, right? You're gonna take these concepts, right, where I explain them and how we trade them, and you're gonna have to see if it works. And the best way to test it is, to actually trade it. I always say size down till, you know, you feel confident and you see that in your log, you're seeing that the testing of your thesis is working. It's almost like a drug. You know, I'm not going to use COVID. Let me use something else. Like a medicine comes out and they're testing on the rats and every rat dies. Should that be passed on to humans? Most likely should not be. But if that drug is doing what it's supposed to and side effects are, you know, little to none, it should be passed and you should use that drug, right? And it's the same concept here, right? You have thesis, you have the concept, whether it's playing imbalances, playing high volume nodes retest from the imbalance to the balance. And you go, and next step is going to be, you know, we're going to cover volume profile and combine the volume profile with the footprints. The way I trade is, for instance, I'm going to go back to this. So if this is my, you know, I'm just going to hide everything here. If I look at this high, you know, chart and I'm on daily, right? A lot of you guys just see candles. I see a lot more sometimes instantly. I see the zone, I see consolidation, I see a markup, I see a, you know, consolidation, markdown, not breaking lows, right? Like pivotal lows are here being held. But then I use volume, right? I'm able to kind of quickly distinguish, hey, where's the level that I'm interested in? For instance, let's say this level here. Am I on the right contract? Yeah. If I'm looking at this right here, 44.20, right, is going to be a fairly important level. So then I would go to footprint charts like this one, and I would look at, you know, an ES. I would look at the 44.20 level and see what's there. Let's refresh this. And let's take a look, right? So if you look at this at 44.20, what do you see? I would zoom in a little bit, right? I would zoom in and see what's going on. Like, where are these people? Where are they hiding? And you can quickly see, you know, these are almost like volume profiles. Where's the high volume node? You see this little bulge right here, and that's where the imbalance happened. Then I look to see if there's any, you know, where's there any completed auctions before? Well, I zoom in, and what do you see? I see two. I see immediately, you know, they were not interested here before to trade above it, and then look what happened. Oh, there's an aggressive buyer here, right? There's a buyer here. There's an aggressive buyer here. They came back. They were not able to drive the price lower, even with this huge negative delta. So now I'm interested in this zone right here. And I would extend that. And then I'm like, okay, well, I know this is the footprints, right? And I see the delta here. I see some aggressive buyers. And, you know, we are where we are. Let's see, we're very close to it. And on volume, I don't have the chart necessarily. You know, maybe I do. Oh, yeah, I'm glad I kept it. Okay, well, this is now screwed because it's the ES shift in the contract. I don't think it'll stay here. Yep. Yep, sorry, I was going to show you, but the contract shifted. So this was, this was at one point a level that we were watching here, 44.40, if you guys remember. We were far away from it, but, you know, really not. This was the level where we said, you know, you can short here below, but we were not watching. And what did we say about this level here that we had, 44.25? Do you guys remember the commentary from watch list?
Yeah, that was some kind of a monthly POC or June's value area. I don't remember, but I know it was important.
Yep. And I think we wrote, right, that in the watch list, if you go back and watch it verbatim, I'm not interested shorting this level here. There was so much at this level. There was probably a ton of, you know, cumulative from, I believe, June 9th. Yeah, June 9th, all the way to there was pretty, well, now it's different, right? The level shifted, so they mess with me. But the level shifted a lot, right? And we had a huge level here at 44.20 and couple of value area lows. It was a weekly VPOC, so there was a lot going on at that level. And they're most likely going to defend it. And I don't expect anything less, and I would not short it, which corresponds with the action of buying and aggressiveness of buyers here as well. And you see here, I mean, if you were to just grab volume profile from here to the top, you'll be able to see all the high volume nodes and liquidity points where they are. And you see here, for instance, you know, this liquidity of 4,400, it's been great. Once you're able to auction below it on a daily, most likely you're going to fill this, and this becomes a decent zone value area low of this run up as well. So that's the how I look at the market, you know, step by step. Okay. Does that make sense or help answer your question? So the next steps would be you get familiar with the, you know, the quant tower and how to use it, or NinjaTrader, whatever you use here, charts. You establish your footprint charts. And unfortunately, I'm gonna close the class here shortly because I do have a soccer game at 11:30. I'm coaching. But the next step would be that we have volume profile, right? So for instance, in this chart here, that's also in the PowerPoint that I added slides for you guys. So there's a lot of examples on the footprint. So we'll stop on slide, you know, where I think we stopped here at 23. I can do a session tomorrow morning for everyone. Again, we can continue from slide 23. It'll be a kind of like a two-step class. So you guys absorb the footprints knowledge, and then we can cover from 24 and finish the class tomorrow, probably another 2 hours, where we cover the rest and combined volume profile and market profile, and you guys would have kind of the knowledge of what it looks like. And there are some examples that I copied, you know, from the charts here as well.